We're going to close today, guys, with kind of a little bit more talk specifically about mortgage rates going into the new year. CNBC came out with this week. It said mortgage rates may be stabilizing after the election. Here's what to expect into early 2025. So they're using the word stabilization as a good sign for the housing market. But is stabilization what we want? Don't we want rates to go lower?
Of course. We always do.
So what do you make of this whole stabilization talk?
Back to what you said, conditioning the new norm.
Okay. What else? Anything?
I like that.
Yeah, just continue. No, we're just soft lying to people.
Yeah.
Or trying to sell them on the idea.
Yeah.
Yeah. So one of the things I saw here, they're saying the steadiness of mortgage rates may be a good sign for the market, but I'm not sure if it's good for sellers yet because they're buyers right away.
Yeah.
And that's kind of always the case. I know that's like, duh. Yeah. Well, when you sell a house, you're going to probably most likely buy one unless you're selling your house and you're going into like a retirement home or something.
Yeah.
You're buying another one. So I don't know how much further we need to go, but I think there's still more room before people agree that they should be selling. We've seen an increase in inventory, but the trajectory is still going that way, which means there's probably some more people waiting that would indicate we need rates to go a little bit softer, and then those people will
Yeah, because they're going to buy too, right? And people who are holding back right now are people who don't need to sell, but people who are getting, work orders elsewhere, it's a must. It's just, I got to see what I'm going to be able to sell, and figure out what I'm going to do now.
And the fixed income is a big part of that, because I was thinking about that. I was reading this one in prep. I was like, I think fixed income is really going to be where people make that move because they're waiting for that maybe 0.5% or even whole percent. If it gets there, whole percent decline. Stabilization does not make me comfortable, to be honest, guys. I don't really want stabilization right here. I think there's more room to go to the downside for mortgage rates specifically, because I think that we're relying too much on other factors to make up for high mortgage rates that I don't know we're going to see actually prevail.
No,
I
exactly.
hope they do.
And it already says it here on this article, right? They foresee inflationary policies, whether it's tariffs or greater government spending, the tax bill, they're pricing in more inflation. It's already getting priced in. We're already going through that. That's what happened when the client called me and said, "Hey, but they reduced the Fed funds rate by 50%, right?" Yeah. We were already getting better pricing 3 weeks prior to that announcement.
Yeah.
And now, then we got that the government's going to go ahead and reduce it again. The Fed funds, Uncle Powell, is going to reduce it by another 0.25%. And guess what? The rates went up instead for us.
It's because it's predictive, and I think that's the part that people miss is they don't understand, or they haven't been taught maybe that it's predictive. Yeah. So they're forecasting what they think needs to happen now to achieve the outcome they want down the line.
Correct.
And that's well and fine in its intention. I think it puts too much pressure on the mortgage rate itself. And again, I know I'm saying on one side, I'm like, I want these other factors to provide some ease for people financially. I'm also saying I'm not 100% trusting that that's going to happen because of what you're talking about. There are some things that are a little bit inflationary in part of this whole upcoming policy that we have yet to see. Yeah. But we're also hoping that there isn't inflationary stuff going on, and that all of a sudden people are going to magically snap your fingers and afford a house. Like, and something's got to give.
And here's one thing that people, or myself, I didn't understand before. Interest rates is not how the government borrows money, right? They borrow money based on the Fed funds rate, right? So by them lowering that with the money that we currently are in, what is it, like 33 trillion?
The trillions of
deficit. So remember, they also, that's right. We just went to 35. So they borrow, now they're going to refinance the loans based on that because now it's cheaper, right? Yeah. So that's what people don't need to understand more of why they're doing this. These are all strategic.
So here's something that I want to just bring up. I'm going to read this verbatim because I want to make sure I read it clearly, and I'm going to tell you my quick take. From a monetary policy standpoint, future rate cuts are up in the air. Federal Reserve Chair Jerome Powell said Thursday that strong U.S. economic growth will allow policymakers to take their time in deciding how far and how fast to lower interest rates. I don't like the sounds of that at all.
But Eddie, people are still spending money.
Hold on, I know that, but think about how long it took us to get here. Yeah. If you're on, I'm going to use a amusement park ride as an analogy here. If you're going tick 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 all the way up, and then it kind of goes, and then it goes down, like kind of, it doesn't go like tick 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 flat, flat, a little bit down, flat, flat. I know we're not on a roller coaster ride in real life, but like honestly, we need to go back in that direction a little bit quicker. I understand the economic argument. That's going to cause more inflation right away. We have an affordability problem. We have a borrowing problem. We have a spending problem. Something has to give. One of these legs of the table has to fall so we can start doing some corrective stuff because we're just fighting this. We're fighting this circular game financially. And I don't like that Jerome Powell is already soft selling us the idea that they're going to take their sweet ass time. Yes, I said that.
Yeah, they don't want us to have fun, Andy, like when you do on the roller coaster.
I know, I'm talking about roller coaster. Like, hey, you know what sounds good right now? Going on an actual roller coaster, not an emotional one.
Because I've just been an emotional one.
But how crazy is it that he's like, you know, they just like, it's almost like it's kind of buried, and they're like, oh yeah, future rate cuts are up in the air. Wait, what'd you say?
Yeah.
Future rate cuts are up in the air. So I don't know. That also says to me that they made a mistake. I'm going to say that too. That means that they made a mistake because that means they should have held higher for longer, even though no one wants that. Yeah. But it might have been what they actually mechanically had to do in order to affect the outcome of prices coming down that they actually were trying to
So in
accomplish.
December, you think there's going to be a rate cut or not?
I think they're going to. I'm 50-50. And I'm actually tell you why. I have a technical reason and a non-technical reason. So I think they could reduce the rate because they know they should and they need to.
Yeah.
I think they may not because Jerome Powell wants to dig his heels in on the new administration.
Okay.
And say, you're not the boss of me. I ain't doing it until I'm ready.
Until 2026.
No, until 2025.
Oh, 25 is it? I thought it was 26 he's there.
No.
No. Dropping rates. He's not going to drop rates until 2025.
I mean, dig his heels and not give the incoming administration a win in the win column. I'm just going to, you know what? I'm not going to do a rate cut. I'm going to hold my posture until we have our new meeting in the quarter one. I think that could happen.
I can see that.
Yeah.
And that's more of a gamesmanship thing than a technical thing.
I feel confident they're going to do it.
You think they're going to do it?
Yeah,
okay.
I think they're going to, I'm like at 80.
80%?
Yeah.
All right, cool. Well, I'm not going to put money on that because I said 50-50, and I'm not going to win anything.
I just said no, so we'll see.
Yeah.
All right. Well, I mean, if you guys have anything more to talk about mortgage rates, we don't need to talk about this any longer.
That's just like it's.
No, it's going to be what it is. We're going to have to watch this very closely. We talk about mortgage rates internally all the time. We talk about it on the show regularly enough. If you have questions,
I dream about them.
You need to reach us. You know how to reach us. Let us know. We'll talk about your specific situation.
Yeah, I just, again, with the interest rates and the home prices being where they're at, if we're going to get our kids into homes, we're going to need the lower rates for them to be able to afford this. That's just, our kids, as soon as they get out of college, what do they want to do? Yeah. They want to go out there, find a wife or a husband, have some kids, create a family, and they want the whole American dream,
the whole
thing, right? Like, and this is right now with rates being the way it's at, with home supplies being the way it's far of a reach for them.